Hi, everybody. This is Jonah with ForexRazor.com. I hope everybody had a great weekend, and I hope everybody was able to make some pips off of non-farm payroll. Well, guys, I can tell you right now, non-farm was a pretty big disappointment in my book. Really saw a lot of risk aversion out of the U.S. dollar, which I was actually kind of shocked to see that, guys. Didn't think we'd see a good bit of risk aversion on these numbers because everybody has been so bearish on the dollar lately that it really shocked me that unemployment numbers were really what did it. The unemployment rate came in at negative zero point 0.2, more than expected, and that really is what sent the market down into risk aversion because the actual non-farm numbers were actually positive. And I'm going to give you a brief explanation here of what risk aversion is. You see this downward pressure. Let's pull it down a little tighter here. Let's get down to hourly chart. This is Euro USD on the hourly chart. Here's release on Friday. You see this thing's pushed down a good 500 pips since then. Okay? Now let's take a look at US yen here. And see, here's US yen on an hourly as well, and you can see the same thing here. This push down from right here, this is non-farm, and it pushed down about 300 pips here so far. So that being said, you've got two pairs that are reversed as far as the dollar is concerned. You're looking at US yen and Euro USD, and the yen's gaining strength against the dollar, but at the same time, the euro's losing strength to the dollar. And what that actually is, guys, is risk aversion in its simplest form. What's happening is yen is being repatriated back into Japan. And when that happens, it comes out of all the other currencies because there is fear in the market of stability. And when there's fear of stability, yen gets repatriated. Japan's always had money out on loan for a very, very long time because of low interest rates. So what happens is these high risk investments start being closed out. Japan starts calling in loans, and therefore money starts coming back in to Japan, not just from the U.S. dollar, but from everywhere. And because of that, that's why you see the appearance of dollar strength on the euro, the appearance of dollar strength on the pound, the appearance of dollar strength on the Aussie. But really, your yen is your determining factor because it lets you know what's really happening there. And we actually have not seen risk aversion in probably about a month. The market's kind of calmed down. We were really heavy on risk aversion for about 3 months here, while we've been going through this big bust in the stock market, and we've lost, thousands of points off the Dow. A lot of that was risk aversion based, but we haven't seen it in a while. But apparently, it was creeping back in the market right now. So let's get back to our outlook for this week. All right, guys, we're back to euro here. This is an hourly chart again that we're looking at. Now let's take a look at a 4-hour, and you can see we've got this little downtrend kicking. We've got two trend lines in play. We broke through. Remember, we bounced here. We were talking about this bounce, how this was a significant level. Well, guys, here we've broken through the 200 SMA. Now this is a bearish signal. When this 200 SMA goes, there's not really a lot of support on this pair. Back until we start getting back down to the 30 and 29 level. We got a little trend line here in play right around 29, and I think the 30 will probably offer some support just because it's psychological. Let's pull down to an hourly here. But you can see we've got a nice move down. We've got the 200 SMA on the hourly chart now offering resistance. It's actually followed by the 100, and there's the 50, guys. And these are all offering resistance right now. In fact, the most recent one in play here is the 50, and that is still offering resistance currently. I do think we're probably due for a little bit of retrace. Here's a 15-minute, and you can see we have a nice 15-minute trend line here on euro with very low retracement. In fact, you can back this thing down, and you can see this thing has been in play for quite some time. Since the beginning of the week here. So we've got a good level of resistance here on Euro USD. A lot saying this thing's going to go bearish. How deep is it going to go? I would guess we're probably going to test the 130. We might get a little kick back up, maybe back up to the 200 SMA. We actually got that right here. This is actually off Bernanke speaking this morning. You can see that release was right around 9:15. We had an anomaly spike come up, and we had Bernanke speaking over in the UK, and some of the things he said, drove price up temporarily, and we almost tested that 200 SMA there, but it's not a permanent thing here. I think we're still bearish. There's no real reason for upward movement on this pair. Again, if you look at the longer term time frames, there's an hourly chart, there's a 4-hour chart. There's just nothing here. There's nothing in between here and there. Let's look at the daily. You can just see our first level of real support comes in right around that 30.50 when we actually start getting some of the old resistance from these candles on a daily level. So not a lot there. We could definitely free fall. Let's take a look at the pound USD, and we're going to see that we're again getting back down into oversold territory on this pair. All right, guys, here's a 4-hour chart on pound USD, and you can see we're trying to get back down here and retest yearly lows. Again, pound USD, there's your yearly low right there in yellow. We are getting down there. We're not too far off of that. That level's going to hit you right around the 43.50 level, and we are only about 150 pips off of that at this point. Now, if this level goes, I wouldn't be shocked to see 140 hit over the next few days. If new lows are made, guys, pretty much a rule of thumb, new lows are made on a major scale. You need to look at probably at least a 200 to 500 pip extension, bare minimum of 200 pips. So obviously on a breach of this level, we'll be looking to get short. 15-minute chart on pound USD pretty much looks a lot like the euro. We've seen the same downward trend, no retracement, just slowly work its way down here, guys. I do believe that we'll get a little bit better market movement here over the next few days. The last 2 days have been pretty much void of economic data. We've just been running with this the concept of non-farm, and I think that's probably going to start dissipating here. And now tomorrow we've got a few key economic indicators coming out. We've got core retail sales out of the U.S., which is going to be a significant report for the U.S. Also on Thursday we have the euro interest rate statement, which will be interesting. They're forecasting, of course, to cut there. That will definitely help give some direction. And also the press conference that comes out from the ECB directly after the interest rate statement will also play a role on Thursday. As it stands right now, guys, we're definitely got risk aversion across the board. You can see it on the pound, you can see it on the euro, you can see it on the yen, and it's pretty hard to say if that's going to continue because the last 2 days, again, this is Tuesday, January 13th, we've been kind of void of data. So I think we're just running on technicals right now, but there's not strong pressure either way. Personally, I'm actually kind of stepping back out of the market, waiting to see a significant level of resistance. The pound starts challenging those lows around 43.50. I might start looking to buy with a small stop behind support, and if it breaks, I'll be looking to sell, guys. Good luck, have a good day, and we'll talk to you later.